Welcome back. Shares of Nvidia are up by about 4%, getting closer to high territory. After the company, after the close of trading yesterday, reported sales that still rose substantially despite the Trump administration's limits on how it does business and what it can sell in China. My next guest says investors, however, are under-accounting the importance of China to the Nvidia story. Let's bring in Gil Luria. He's head of technology research at D.A. Davidson, and he joins us right now. Gil, thanks a lot for joining us on perhaps the most high-profile stock in the stock market these days, Nvidia. I've read your note. You do put a lot of emphasis on the company's restricted ability to sell products into China and the lack of clarity on that topic. So why don't we begin there? That's a big part of this story.
Yeah, so there's many moving pieces here, but what's really important to remember is that this has nothing to do with tariffs or trade regime. This has to do with the fact the United States government has decided that it's a strategic imperative not to allow China to own advanced AI equipment, so they cannot get a lead over the U.S. in terms of development of AI models. And what that means is that they put in even more restrictive regulation around what Nvidia can sell into China. And Nvidia let us know about that on April 9th when they took a big write-down. The reason the stock is up today is yesterday they were able to come out and say, look, it's not as bad. We're able to sell some of the chips that we weren't going to sell. And they made it seem like they still have a plan to introduce new chips into China into the future. Since the rest of the business did so well and they were still able to exceed expectations for the quarter and guide for sequential growth into next quarter, investors were very relieved and almost put the China matter aside. We're not sure that it's time to do that quite yet. We're not sure what chip they'll be able to put out that would fit the new regulations and how that chip is going to be received in China, considering the domestic suppliers like Huawei, their chips are getting better and better. So China is still an overhang. It's a very big market, and it's unclear that Nvidia will have as much access to that market as it used to have.
Is that why you have a neutral rating on the stock? Do you need more clarity on the China market before you move to a buy on the stock?
Yeah, part of our immediate concern right now is around China and how that translates to Nvidia's ability to grow. The neutral rating is more based on the overall observation that expectations for next year are very aggressive. The consensus estimates are that Nvidia is going to do $250 billion of revenue next year. And with China, which is probably a quarter of the market, possibly not coming back or coming back in a much less significant way. That's one reason to think that expectations may be high. And the other one is that Nvidia's largest customers, Microsoft and Amazon, have already started to flatten their spend. Google, Meta, still spending increasing spend very rapidly. But the sum of all those may not be enough to generate the type of growth that is embedded in consensus expectations for next year. You
have also flagged, I gather, a slowdown in data center revenue. Perhaps you've just referenced that with that reference to Microsoft and Amazon, but you say data center spending from data center builders is slowing down. Yeah, that's exactly right. So the sequential growth rates really peaked in the fourth quarter. And then Microsoft was flat on CapEx this quarter, will be flat next quarter. Amazon talked about being flat for 4 consecutive quarters. And again, they're 2 of the 3 largest customers for Nvidia chips. So that's going to be a little bit of a headwind in terms of Nvidia's ability to continue to grow at the sequential growth rates they've had in the past, especially if they don't have enough from China. How prominent is the new Blackwell chip in the market's thinking on this stock right now? That has been a very keen focus in recent quarters. Is that story getting more mature now? Yeah, in retrospect, we were probably too worried about that. If you look at the big picture, Nvidia is introducing products very aggressively. There were some production issues around the Blackwell chips. They're just
more expensive to produce. They're harder to produce. The level of customization they're doing for their customers is very unique, but that's also a differentiator for Nvidia. They should be, I believe they crossed the halfway mark in terms of how many of their GPUs are now Blackwell. By the end of the year, it'll be more than 80%. And by this time next year, they'll be selling Rubin chips. So that's Nvidia still does have the lead on chips. Blackwell is the state of the art. It will remain so. And that's why it's important for them to continue to introduce these products aggressively. The one place where you do see that is that gross margins have been a little lower the last few quarters than they had been as this transition happens. And again, as they transition again next year, we'll see the same impact. That really puts a cap on gross margins. But apart from that, this is something Nvidia has to do to continue to maintain its lead.
Okay, in addition to maintaining a neutral rating on the stock, you have moved the price target up by $15 per share to 135. That is just shy of where the stock is right now. Explain your methodology there.
Yeah, so we increased our estimates because we thought China was actually going to have more of an impact on this quarter and on the July quarter. And it is very impressive that Nvidia still has sequential growth from the April to the July quarter with much less China revenue. And so we raised our numbers and again, believe that they have a good trajectory for the rest of this year and even somewhat into next year, just not as high as consensus estimates. Those are, to us, look like a very aggressive bull case.
Gil, thank you as always for joining us on this story. Gil Luria is head of tech research at D.A. Davidson. He has a neutral rating on shares of Nvidia and a price target of $135 per share.